So, good afternoon, everyone. Thank you so much for joining us this afternoon. My name is Fuji. I'll be your host today, and we will be talking about choosing the right structure for entry in Indonesia in 2026. My colleague Javier and also Dita here will be talking from the legal perspectives of choosing the entry structure, and we also have Yeni, who will touch on the tax perspective consideration when choosing entry structure in Indonesia. Whenever you have a questions during the session, please feel free to drop it in the Q&A box or in the chat box. We will try to answer it by the end of our session today. So without further ado, I will invite my colleague Javier to start with the session today. Please, Javier.
Okay, good morning, everyone. My name is Javier, and I want to welcome you to our strategic webinar, How to Choose the Right Indonesian Entry Structure in 2026. Entering in the Indonesian market is one of the most lucrative moves a global company can make today. However, it is not simply a matter of filling out administrative form, it is a profound strategic decision. The regulatory landscape in Indonesia has evolved rapidly. The government is opening the doors wider to foreign investors, but in return, they demand strict, uncompromising compliance. Choosing the wrong legal structure at the very beginning can trap your business into the operational bottleneck, delay your market entry by months, and cost you significantly in compliance restructuring. Today, I'm going to guide you through the two primary gateways into Indonesia. The first one is the rep office, and the second one is the PMA or Foreign Investment Company. Here's our roadmap for today's session. First, we will spend significant amount of time deep diving into the rep office. Many investors mistakenly believe that RO is just single simple entity, but I will show you there are actually 5 distinct type of rep office. And second, we will also identify the exact business trigger that legally mandate you to bypass or upgrade from a rep office and directly establish a PT PMA. So let's begin with our first pillar, the rep office. Legally speaking, under the latest BKPM regulation number 5 of 2025, an rep office is strictly defined as an administrative extension of your foreign parent company. It's not an independent legal entity in the way a limited liability company is. So the core concept to remember is this. You are here to supervise, to coordinate, and do the research. So you are absolutely not here to trade. To put it on a business term, a rep office is purely a cost center. The Indonesian government allows you to set up office so you can spend money in Indonesia, hiring staff, renting office space, conducting surveys, but you cannot earn money locally. So in essence, you cannot issue a commercial invoice to Indonesian client. The second one, you cannot sign a binding sales contract from your Jakarta office. And also you cannot book local revenue. All commercial transactions must remain directly between your overseas head office and the Indonesian client. So why start with rep office? So there are 3 massive strategic advantages. First one is speed to market. Establishing a PTPMA can take months of preparation. An rep office, however, can be established and obtain its business identification number in just 2 to 4 weeks. It gets you boots on the ground immediately. The second one is the zero capital injection. So an rep office completely bypass this barrier. There is no minimum paid up capital requirement. You simply fund the office monthly operational expenses. And the third one is the ultimate vehicle to like test the water. So you can hire local team to gauge a real market demand. If the market isn't ready, closing an RO is an administrative process. But liquidating a full PT PMA, however, is very likely complex and costly legal procedure. Now let's briefly look at the essential setup requirements for establishing a rep office in Indonesia. From a regulatory perspective, there are 3 key elements. The first one is the appointment of chief representative who will act as the official license in Indonesia. The second one is a valid office address, since rep office must have a registered local presence. And the third one is OSS registration, online submission system registration, which is now the main gateway under the risk-based licensing framework. On the documentation side, the regulator typically requires the foreign principal corporate documents, the chief representative identity, as well as supporting letters, including the letter of appointment, letter of intent, letter of reference, together with a valid office lease agreement. Now, let's talk about what rep office can and cannot do under the current Indonesian regulatory framework. From regulatory standpoint, rep office are intended to support market entry, not to conduct commercial operation. This means the permitted activities are mainly preparatory in the nature. For example, they can act as a liaison between foreign parent company and Indonesian stakeholder, coordinate communication, build local relationship. They are also allowed to conduct market study and research, gather business intelligence, and support advertising or promotional activities as long these do not involve direct revenue generation. Another common use is preparing for a PT PMS setup, such as exploring partnership, undership regulatory requirements, or building initial presence before committing to full investment. On the other hand, there are clear prohibitions that the company needs to be aware of. Rep office cannot generate income locally, cannot sign or execute sales transaction, and cannot engage in production, trading, or operational activities that resemble a commercial entity. So the key principle is this: the rep office may facilitate and prepare, but the moment activity becomes revenue driven, the structure should be a PT PMA. And one thing to remember that chief representative office that cannot hold dual position. So under the law, your chief rep cannot simultaneously serve as director or commissioner in another Indonesian PT company. And this is please pay close attention to the 5 specific type of rep office in Indonesia. The first one is General Representative Office, KPPA. This is the most common form, regulated directly by the Ministry of Investment. It is purely licensed at administrative purposes, and you are restricted from conducting active sale, promotion, or distributing physical goods. The second one is the Foreign Trade Representative Office. So this is regulated by the Ministry of Trade. This is built specifically for manufacturers who deal with like physical products. Unlike the general KPPA, KP3A is legally authorized to conduct sales promotion. So you can participate in trade exhibition, distribute marketing materials, and showcase product example. However, the golden rule is that when the client wants to buy, the contract goes straight to the head office. And the third one is the e-commerce representative office. This is highly specialized mandatory rep office. So the trigger is that under the Ministry of Trade Regulation number 31 2023, if your foreign platform handle more than 1,000 transactions or deliver more than 1,000 packages to Indonesian customer in single year, you're legally forced to open this office. And for the fourth one is the Foreign Construction Representative Office, regulated by the Ministry of Public Works. This is a global large-scale construction targeting mega projects like toll roads or dams. But the strict point is that BUJKA cannot operate independently. So to execute any project, you are legally required to form a joint operation, or so-called KSO, with a qualified Indonesian construction firm. This is designed to ensure technology transfer and empower local businesses. And the last one is the Electricity Support Service Rep Office. So this is governed by the Government Regulation 25 of 2021. This is a representative as entity established by foreign company acting as license in Indonesia. It does not conduct direct business but function as project facilitator, market monitor, network builder, and technical support provider. Okay, and then to the next one. So let me walk you through to the typical establishment process of ref office. So the first one is that the first step is confirming the right RO structure. Companies needs to determine whether they should register as KPPA, KP3A, or the other type of RO, rep office, depending on their business objective. Once the structure is clear, the next phase is preparing the required documents. This include collecting foreign principal corporate documents and drafting the mandatory statement and appointment letters. Another key requirement is that obtaining letter of reference, typically issued by Indonesian embassy or their trade attaché in the parent company jurisdiction. After the documents are ready, the application submitted through the online single submission system, and then the OSS platform process the registration, and if approved, issues licensing output, including the business identification number and the representative office license. Following issuance, company may need complete additional steps such as tax registration with the local tax office and certain for obtaining further approval with the relevant ministry before starting operation. So overall, the process follows structured journey from selecting the right RO, rep office to OSS, and finally completing the licensing post licensing compliance. And rep office risk and compliance, the common pitfalls is that one of the most frequent risks we see is choosing the wrong rep office structure. And then the second one is the rep office licensing sometimes looks simple, but sometimes require consistent documentation. The typical issues like include mismatch between foreign parent document, incomplete appointment letter, or unclear activity descriptions. And the third one is that another letter of reference from the foreign company. Even the small wording difference, for example, unclear authority scope or missing appointment statement, can delay approval. And then for the ongoing compliance, is the activity consistency. So once the rep office is established, maintaining activity consistency is very critical. Rep office are not allowed to conduct commercial transaction locally. Under OSS risk-based system, risk-based approach, authorities may check whether the activities reported align with the approved scopes. And OSS data updates, so the BKPM regulations meaning any changes must be updated into the system. For example, include change of chief representative officer, office address updates, and modification of activity. So failure to update this can create incompliance and risk during the supervisions. And the last one is the reporting obligation. So even though rep office are not operating entities, they are still fall under the investment supervision. Depending on the structure, like LCAP, they must submit the investment activity report twice a year. Okay. And then, so this is like bring us to the strategic crossroads. So a question I get asked very often is, Javier, do I have to start with a rep office before I can open PTPMA? So the answer is the absolutely no. So if your business is ready to execute commercial transaction today, opening a rep office is just waste of time. You must bypass the rep office and go directly to establish PT PMA. So by law, PT PMA is the only foreign-owned entity that is granted full commercial rights. Yeah, you absolutely must establish a PTPMA if your business requires these following three things that I show you in the PowerPoint. The first one is to generate revenue, and then the second one is to execute the binding contract, and the third one to import, like manage inventory. So if your immediate goals checks any of the three boxes, the rep office is the wrong tool, and the PT PMA is your mandatory starting line. So now, as we have seen, the rep office are fast, flexible, and efficient for market exploration, but they are also structurally limited. The moment your business needs to generate revenue, the rep office framework is no longer sufficient. And that's where the PTPMA becomes essential. So to guide us through how PTPMA works as full commercial vehicle, including capital requirements, licensing, and strategic consideration, I would like to hand over this webinar to Dita. Dita, please.
Thank you, Javier. Hopefully, I'm audible to the audience in this webinar. Hello, my name is Gita. Continuing from my colleague Javier, now that we have discussed on representative offices, now the question is, when do we exactly establish a PTPMA? And the straightforward answer is when the commercial activity begins. So, in a nutshell, PTPMA is an Indonesian limited liability company with foreign shareholding and then incorporated under Indonesian law and governed by several of these regulations. Generally. So there are regulations under the Indonesian company law, and then there's also the foreign investment law. And lastly, there's the positive investment list, in which we will dive deeply on this one as well. As for the establishment process for a PTPMA, there are 6 to 7 steps that we can usually um, see under the Indonesian law, which is first the phase one on the structuring and the KBLI. So KBLI is an Indonesian classification of business activities in which a company or a PTPMA should pick to determine their business activities and then later on to know what the risk level of the business and then what are the required licenses. And then as for the structuring itself, we need to the company needs to determine the shareholding composition and then the company organs. We will get more on the requirements in the next slides. And then on phase two, there's the drafting of the deed of establishment. And then the deed of establishment must be drawn up in front of a notary. And then on phase three, the notary will submit the deed of establishment to the Ministry of Law system. And then the decree or like approval from the Ministry of Law will be issued. And then this is the evidence in which shows that the PTPMA is effectively established. And on the next step, on phase four, there's the tax registration, in which a PTPMA must register their company, the tax ID, to the local tax office. And then later on phase five, we have opening a bank account. See, the opening of a bank account is placed on phase five because some banks usually requires deed of establishment, the decree from the Ministry of Law, and even the tax ID of the company. Therefore, if a company already has like all of these requirements, it's easier for them to actually open a bank account. Later on phase six, depending on the risk of the business activity of a company, there is the OSS registration NIB. This means OSS means online single submission. It is a platform or a system in which business actors or like PTPMA or even local companies apply for their licenses. And then the licenses are depending on the risk of the business, and which can be found in the next slide. Lastly, there's the application for business license depending on the rest of the business. Before we discuss more on the Indonesian classification of business activities, there is one term that you should all know, which is on the positive investment list. See, under the Indonesian law, for the foreign ownership of the of a PTPMA depends on the classification of the business activities of the PTPMA itself. See, under the presidential regulation number 49, there are several categories in which a company is classified under their foreign ownership restrictions, which are first, open 100% for foreign investment without any particular partnership requirements. And second, partially open for foreign investments. Several of the clients that we have are usually barred or capped until like either 49% or 51 or even 67%. And then this category on the partially open for foreign ownership are, for example, applicable for several sectors such as construction, in which they require joint operations with local partners, or even telecommunication infrastructure, um, because it requires a cooperation with local partners as well. And lastly, there is also a closed category under the positive investment list, which are for sectors which are completely prohibited, such as gambling or even strategic defense manufacturing. And then that is for the positive investment list. Once we have been aware of the positive investment list and then the foreign restriction, we have to determine as well the Indonesian classification uh, of business activities. See, there are three types um, of risk level for a business activity, which are first, low risk. This activity only requires a business identification number, or business identification number serves as a ID card for a PTPMA. And then the second risk is medium risk. Medium risk is categorized into two different subsections, which are first, the medium low, which only requires a business identification number and a standard certificate issued by the company. And then there's the medium high risk, which requires a business identification number and a standard certificate issued from the relevant authorities or like ministries. And lastly, there's a high-risk business, which requires a business identification number and a business license. So, the higher the risk level, the complex the licensing regime would be. Okay. Next, we have a capital and investment requirements. So these are two different things. Capital is capital is something that is governed under the Indonesian company law, which is consists of the authorized capital, issued and paid up capital. The difference between authorized, issued, and paid up capital is that authorized capital is the maximum amount of capital that a company is allowed to issue and is stated in the articles of association of the company. And by law, there is no statutory minimum amount for the authorized capital. However, as for the issued and paid up capital, the issued capital is the portion of the authorized capital that has been allocated to shareholders. And then for the paid up capital, this is a portion of the issued capital that I previously mentioned that has actually been deposited into the bank's company account or like the company itself. For the minimum requirement for the issued and paid up capital, it requires IDR 2.5 billion. And then as for the minimum investment value, there is a difference between minimum investment value and capital. See, for minimum investment value, this is the minimum investment that a PTPMA must invest in Indonesia per KBLI number per project location. And the minimum amount for this value is 10 billion rupiah. As for the establishment of a PTPMA itself, for the composition and requirements, under the Indonesian company law, it is required to have at least two shareholders, and then it also has to have a shareholder, board of commissioners, and then a board of directors as the corporate organs. And then for several business activities, such as wholesale and then other trading activities, they're required to have a physical office location. We understand that maybe sometimes you see that there are like virtual offices that are open or like they're open in Indonesia, but we usually recommend to our clients to open a physical office because once the PTPMA would like to apply a license and then say the risk of the business is medium high or even high, usually from the ministries itself, they would like to inspect and go to the offices and see for themselves the physical office location. So we usually recommend to use the physical office location. And as for the company name for the establishment itself, minimum word for PTPMA is three words. So like PT, something, something, something. It usually is like that. Next, for what a PTPMA can do, as opposed to what a representative office can do, a PTPMA can actually conduct full commercial activities such as trading and then also issue tax invoices, receives payment, and then they can also hire employees, sponsor expatriates, and then also obtain a sectoral license. So, from the legal status and the operational capabilities itself, these two things already shows that a PTA PMA can do more than what a representative offices can do. And as for the post-establishment compliance obligations, there are several uh, compliance obligations that a PTPMA generally must do. See, previously, Javier has mentioned that one of the obligation is to submit an investment activity report, which is a report to show to the Ministry of Investment in which the PTPMA has actually conducted the investment in Indonesia. See, the investment activity report also serves as an evidence that the PTPMA is also in the process of fulfilling the minimum investment value of IDR 10 billion. And then next, we have mandatory manpower report, which must be submitted by the PTPMA. And then there's also an obligation imposed by the Indonesian company law, which is the submission of annual general meeting of shareholders and annual report. And lastly, there's annual and monthly tax compliance. As for the tax issue, my colleague Yeni will then convey on this matter further.
Okay, thank you, Dita. Hello, everyone. My name is Yeni. So now we will move to the monthly and annual tax compliance obligations in Indonesia. Today, we will focus on four types of entities, as these are the most commonly used structures by foreign investors. Let's start with PTPMA. For PTPMA, there are two possible tax regimes. The first one is the normal tax regime. Under this tax regime, the corporate income tax rate is 22% from the taxable profit, which means if the company is generate profit, the tax will be 22% of taxable income. However, if the company is suffering a tax loss, there will be no income tax payable for that year. For publicly listed company, the tax rate can be reduced up to 90%, subject to certain shareholding structure and compliance requirement. The second tax regime is the final tax regime, which is for small and medium entities. This apply to the company with annual revenue below 4.8 billion rupiah. Under this scheme, the tax rate will be only 0.5% from the gross revenue, which means that even though the company is suffering loss, he will need to pay the income tax. Also, for the final tax regime, it only applies for up to 3 years. So, if the company exceeds the 4.8 billion threshold before the 3-year period ends, then starting the following fiscal year, the company must move to the normal income tax regime. Importantly, for PTPMA, there is no branch profit tax because it's already an Indonesia legal entity. So in terms of compliance obligation, PTPMA must submit annual corporate income tax return or CITR, monthly withholding tax returns, and monthly VAT tax returns, but only if the company is registered as a VAT-able entrepreneur. Next one is KPPA. KPPA is a representative office which is not allowed to generate any income in Indonesia. Because of this, there will be no corporate income tax payable. However, even though there's no income, KPPA is still required to submit the annual income tax return or CITR, and then the monthly withholding tax return. Okay. The third entity is KP3A. KP3A is also not allowed to generate income directly. However, it only acts as a selling agent for its overseas principal who export goods in Indonesia customers. So because of this agency role, KP3A is subject to Article 15 income tax, whereby the tax rate is 0.44% of the gross export value, and this tax is final. As mentioned, that KP3A did not generate any revenue, so KP3A is also still required to submit the annual corporate income tax return, and the monthly withholding tax return, and also the Article 15 monthly tax return. Last one, we have BUGKA. BUGKA relates to construction and services. The income for BUGKA is a final, which rates varied from 2.65% up to 6%, depending on the classification of qualification of the construction service provider. In addition to the corporate income tax return, there is another additional tax, which is a branch profit tax at the rate of 20%. However, this rate, 20%, can be reduced under applicable tax treaty, provided the treaty requirements are fulfilled. So in terms of tax filing compliance, BUGKA must submit annual corporate income tax return, monthly withholding tax return, and monthly VAT return if it registers as a VAT-able entrepreneur. So each structure has different tax exposure and compliance complexity, which is why entity selection at the beginning is very important from a tax perspective. So now I hand over the session to my colleague Dita.
Thank you, Yeni. To conclude, the decision between the establishment of a representative office or a PTPMA usually depends on the commercial intention. See, if your objective is to explore the market or with limited exposure, so the suitable entity to be established is a representative office. Whereas if your objective is revenue generation and then full operational execution, PTPMA is a correct and is the correct vehicle for you to establish in Indonesia. See, if we see from the table as presented in the screen, the difference between a representative office and a PTPMA is mainly for its commerciality. For ROs, it's non-commercial. For PTPMA, it's fully commercial. For revenues, for RO, it is prohibited, whereas for PTPMA is allowed. This also will affect on the complexity and timeline for the establishment itself. A representative office will usually take shorter amount of time to be established rather than a PTPMA. So like a PTPMA would take around 6 to 10 weeks approximately to establish the PTPMA itself. And to finally conclude everything, if you would like to explore the market, establish an RO. If you would like to fully operate your business operation, establish a PTPMA. And that is from us, from me, Javier, and Yeni, and to our MC Sari. Puji, sorry, apologies. We defer back to you. Thank you.
Thank you, everyone, for your sharing today. It's very insightful. I believe some of us might have questions for today session. Please raise your hands if you have any questions from legal or tax consideration of corporate structuring. We will answer your questions here today. Okay, any questions from the audience, perhaps? Okay, we have one, CT. Let me allow your mic first. Oh, okay, yes. Siti, please let us know your questions.
Sure, am I audible?
Yes.
Okay. Thank you for the opportunity. Thank you as well to Miss Dita and Mr. Javier as well for the presentation. It was very enlightening. My question would be, based on the law, the minimum investment must be 10 billion rupiahs, right? Well, the minimum capital is stated as 2.5 billion rupiahs. So I want to know what exactly is the difference between these two requirements. And also, does a company need to have 10 billion rupiahs sitting in a bank account on day one in order for them to have a license? That's it. Thank you.
Thank you, Siti. Let's move on to the next questions. Aisha, let me allow your mic. Okay, Aisha, can you speak now? Hello.
Hello,
Yes.
hello. Am I audible now?
Yes, you are the will. Yes.
Yes. So I was wondering, say if the PMA was established with the business activity of low risk at the beginning, but over time the PTPMA required to add more more complex KBLI like the higher risk, medium risk, and the high risk. Can this be done, and how's the complexity of the process? Thank you.
Thank you, Aisha. Okay, so we have two questions so far. The first one is questions about the difference between the investment amount versus the paid up capital, and second one is adding like more complex classification code after the incorporation. So perhaps Dita or Javier, one of you can take this on. Yeah.
Okay. Am I audible, Mbak Puji?
Yes. Yes.
Okay. Um, Maybe for the first question first from Siti, if I'm not mistaken. I think you're trying to differentiate between the minimum investment value and the capital requirements in Indonesia, right?
Correct.
Okay, so the difference between these two matters are first, capital is something that is actually governed under the Indonesian company law, whereas minimum investment value, this is a requirement that is governed under the Ministry of Investment Regulations. See, as for the capital, the capital consists of like three categories, which are the authorized, issued, and paid up capital. And then the issued, paid up, sorry, and then there is a minimum requirement for the issued and paid up capital, which is 2.5 billion. And then, whereas for the minimum investment value, this is a requirement to show whether a business activity or a KVLI number per project location has already invested 10 billion rupiah in Indonesia. And then the one of like the evidence to show whether a company has actually invested the minimum investment value is by looking at their investment activity report or the laporan kegiatan penanaman modal or LKPM. As for the difference, those are the differences between these two matters. So like these two matters are two separate matters from each other. And as for the 10 billion sitting in a bank account, I think you were referring to the previous regulation. See, we understand that under the previous regulation, it is required to have an issued and paid up capital in the minimum amount of 10 billion. However, as of now, the minimum issued and paid up capital is 2.5 billion. And then this issue must already be in the bank account from day one of the company has already injected its capital in the company. That is for Siti's question. And then the second question, I think the second question was from Aisha. It was regarding the whether it is possible to have PTPMA with low risk and then later on with higher risk or like more complex risk. Is that correct?
Yeah.
Okay. As for like the second
Yes,
question, yes, it is possible. So, it's possible for you, for a PTPMA to say they are carrying out a wholesale business activity. So, a wholesale business activity under the positive investment list is classified as a low risk business, which only requires a business identification number. Later on, say for example, they would like to add another business activity with let's say medium risk, it is allowed as well. However, the company, in addition to amending the articles of association of the company itself, they also have to apply any other additional license. In this context, if they are classified as a medium risk business, they also have to apply for a standard certificate. I think that's all from me. Do you have any additional questions, maybe? Okay, thank
Enough
you.
from me. Thank
Yeah.
you. Thank you very much.
Thank you. We have another questions. Laura, let me. Okay. Yes, please. let us know your questions.
Hello, am I audible? Okay, so I have a question regarding work permits. Would it be easier for work permits to be given to foreign directors in PTPMA, or would it be easier for the chief representatives in representative office? And an additional question would be, will there be any limits to be expected on how many expats can I bring?
Okay. Thank you, Laura. We have taken note on your questions. We take another one from Bimanta. Yes, Bimanta, please let us know your question.
Hello.
Yes.
Yeah, I would like to ask about incorporation company in Indonesia. If we initially establish a representative office in Indonesia and then intends want to set up a PTPMA or a foreign direct investment company in Indonesia, is it mandatory to host the representative office first? Thank you.
Okay. Thank you, Bimanta. We will take another questions. Anu Kanisan. Yes. Anu, please let us know your question. Hello, Anu. Uh, okay, I think Anu, you're still on mute. If you can unmute and
Sorry.
let us. Yep, yep. Sorry. Yeah, please go ahead. Yes.
Yeah. I just would like to check how many type of Indonesia company do you all have? Because initially discussion was on the rep office, after that was on the PTPMA, and then at the last conclusion one there is a rep office and PTPMA, and then there is another one about the annual and monthly tax compliance. That on the title there, there was a PTPMA, KPPA, KP3A. Is that all is a type of the company in Indonesia? That was my
Okay.
question. Yeah.
Yes. Thank you, Anu. We will clarify this. And I think we have another one, Ali Abbas Herliani. Please let us know your question.
Hello, my name is Lani. I was just wondering if one PMA has multiple KBLI and how we should define from the available KBLI that we want to be a KLU, to be the main business lines. That's how is there any guidelines or how is the process to decide whether it is from the company or from the authority? Thank you.
Okay. Thank you, Ibu Lani. So the questions, the first one that we got, Dita Hafer, is about which one is it to get permit for experts? Is it a chief representative officer or director? And how many expert can they bring in? I think the second question is about when, how is the process sorry, what's the next question? Is the, yes, when you have a rep office and PTPMA, whether they need to close the rep office first, and then about how many types Indonesia company actually that there is, to clarify. And the last one is how to determine KBLI codes based on the multiple codes, which one should be the main KBLI. I will let one of you, Javier or Dita, to answer the first questions.
Okay. Thank you for the questions. Those are very interesting questions, and we have received on a day-to-day basis as well from our clients. As for the first question, generally for RO and PTPMA, both can hire expats. However, it's much more easier, and we suggest to we suggest to hire expats from PTPMA because like they can sponsor more as long as they fulfill the 1 to 7 ratio of the expats, say in like between 7 Indonesian Indonesian nationals, there is one expat. So like if there are 14 Indonesian nationals, there are two expats. So it's much more easier that way for a PTPMA to actually sponsor for a national. And then as for the next question, maybe my colleague Javier could answer.
Okay, so for the second question, we also been asked a lot by our client. So I think the question is that if you already have the rep office, is it needed to close the RO and then establish the PTPMA? So I think legally there is no like obligation to close your rep office when establishing a PTPMA. So under BKPM regulations, a foreign parent company is permitted to own and operate both entities concurrently in Indonesia. And however, the maybe the absolute requirement is the strict separation of operational functions. So the rep office it must maintain their non-commercial status, and then uh, for the next for the RO is strictly prohibited from conducting commercial transaction. And then for PTPMA, they're focusing on the commercial section. But although the operating side by side is allowed, so maintaining both means the company must bear double the administrative and compliance burdens. So therefore, from practical efficiency standpoint, we always advise our clients to officially close the rep office as soon as the PT PMA is established and ready to operate fully. And then for the third question, can you repeat the third question?
Yes. The third question is from Anu. To confirm how many types of entity actually there that is allowed in Indonesia, because like in the first slide we have rep office and PTPMA, and then in the like text slide there are like KPPA, KP3A, and everything. Perhaps you could clarify different types of entity that a foreigner can set up in Indonesia.
Yeah, so I think the discussion today is limited to the rep office and PTPMA. And for the today discussion, we discuss about the rep office, and rep office is consists of several type of representative office. The first one is the general representative office, and then the second one is foreign trade representative office, and then third one is has the e-commerce foreign representative office, and the fourth one is the construction service representative office, and then uh, yeah, and then the third last one is the electricity service foreign service company. But I think in Indonesia, in a sense, they have like many type of company. But in this discussion, we only discuss about the foreign, the representative office and the PTPMA. But for your information, there are many type of company in Indonesia. For example, we have like limited liability company is also PTPMA. And then we have also the limited partnership, or in Dutch language is communitair vennootschap. And then we also have the general partnership, and we also have the sole proprietorship, and then we also have the cooperatives. So in Indonesia there are many type of entities, but in this discussion we only discuss about the rep office and the foreign investment company, because these two entities are oftenly used by the foreign client, to open their business, to start their business in Indonesia. So that's for the third questions.
Yes. And the last one is how to choose a KBLI, how to define the main KLU for the company who has like multiple KBLI codes.
Okay. Oh, sorry. Okay. It actually depends on the company itself, whether the company would like to have, for example, let's go from an example first. For example, the company is a manufacturer of spare parts, and then The manufacturing of spare parts is the main business activity of the company. Usually, for like companies which manufacture spare parts would also have their after sales business activity as well for the services of the spare parts as well. And then yeah, we always it is always deferred back to the company rather than the ministry on which business activity is the main business activity, or which activities are considered as the subsidiaries of like business activities, because by the end of the day, the one who will conduct and carry out the business activity is the company itself. So we defer back to the client or the company.
Yes. Okay. Thank you. We have still have 4 minutes. Like, if you had any follow-up questions from there, we will answer it now, or we can also later on answer you any questions you might have via email. You can get in touch with us. We can also share with you the presentation today, if you want, so that you have like more like context and information on what we discussed today. Okay, if there's no additional questions to that, we will close our session today. Thank you so much for our panel today, Dita, Javier, and Yeni. And for all participants today, we thank you also for your participation. We will be having another webinar and we will let you know when we have it. Thank you, everyone, for your cooperation today and have a nice day. Bye bye.
Bye bye. Thank you.
Thank